Balance sheets, income statements, and cash flow statements are important papers about money. A balance sheet shows what a company owns and owes in dollars. An income statement tells how much money a company makes and spends in dollars. A cash flow statement shows how cash moves in and out in dollars. These papers help people see if a company is strong or weak. Looking at these papers helps people decide if they want to buy company stock. A company financial report is a big paper that shows how much money a company made or lost in a year or a few months. This report has lots of details about the company's money. It shows things like what the company owns and owes. It also shows how much money the company earned and spent. The report tells how much cash the company has. It also says how much money belongs to people who own part of the company. Investors use these reports to see if a company is doing well. They check if the company is making more money each year. They look at how much profit the company makes. They see if the company owes a lot of money. They check if the company has enough cash to pay bills. This helps people decide if they should buy a part of the company. You can find these reports on the company's website or money websites. Companies that sell stock must share these reports with everyone. The law says companies must give these reports to a group called the SEC. Reading these reports is important before you buy company stock. Income statement analysis means looking at a company's income statement to see how well it is doing with money. This helps people who want to invest understand how the company makes money. It shows if the company is making more money, spending less, paying taxes, or getting extra money from special events. People look at numbers like gross margin, operating margin, earnings per share, EPS, EBITDA, and net income in dollars. This tells us how good the company is at running its business and making money. In the United States, you can find a company's latest income statements in its reports on the stock exchange website. Checking the income statement is important for people who want to buy stocks, so they can guess if the company will make more money later. It helps people see if sales are going up or down, what things cost, and if the company's bosses are good at making money for everyone who owns shares. Balance sheet analysis means looking at all the things a company owns and owes to see if the company is strong with money. It helps people see if the company has enough cash to pay bills. It shows if the company has too much debt. It tells if the company can keep running for a long time. It helps people see how well the company uses its money. It helps people know if the company is risky. People use numbers like the current ratio, debt to equity ratio, and working capital to check these things. These numbers show if the company can pay what it owes and keep its business going. Balance sheets are in reports companies make every year and every 3 months. In the United States, you can find these reports on websites for the stock market. You can also find balance sheets on money websites and stock apps. Looking closely at balance sheets is very important for people who want to buy company stocks. It helps people see if a company is making good money now and might grow in the future. Cash flow statement analysis means looking at all the money a company gets and spends. This helps us see if the company has enough cash to pay bills and stay strong. Investors use the cash flow statement to see if a company can make money from its main business. It also shows if the company can pay what it owes, give out dividends, and buy new things. Important numbers are operating cash flow, free cash flow, the cash cycle, and cash from loans or stock sales. The cash flow statement tells us how much extra cash the company has and if it can give money back to owners. If a company has lots of cash flow, it can pay bills, grow, and give cash to owners. In the United States, you can find cash flow statements in company reports. Cash is very important for running a business every day. Looking at cash flow helps people decide if a company is worth investing in. Cash flow statements show the company's real money situation, sometimes better than other reports.